It's been a big year for esports, yes, with championships for titles like Fortnite and Dota amassing record price pools as the industry continues to take the world by storm. But despite growing viewership across the globe, it's been a tough slog for esports ETFs, with flows off to a rocky start. With us now is Will Hershey, joining us here on the desk. He's co-founder and CEO of Roundhill Investments, which owns its own esports fund with the ticker, get ready for it, NERD, nerd. It's too good, Will. Welcome to ETF Edge. First of all, tell us exactly.
First of all, are you a nerd?
Yeah, we'll start there.
We are. We're gaming nerds and we're ETF nerds. I think Dave might echo that sentiment as well.
Yeah.
So what are
Break it down for us. What is this ETF?
What are esports? Esports is really this growing global phenomenon of playing video games in front of an audience. Unlike other forms of media, there's really this second derivative that's been built on top of the core IP that is the games. And it's really something that we've seen started in Korea and China. It's now taking hold in the US.
What are some of the holdings of your ETF?
Sure, so one example is Huya, Chinese live streaming platform. So popular US platform Twitch is banned in China. Those clients are looking to different ways to get their exposure to watch their favorite titles. Huya is a name that we like. Coupled with Douyu, own a large majority of that Chinese game streaming market. Another example, Modern Times Group, live events company out of Sweden. These guys run esports leagues, esports tournaments. They're the parent company for DreamHack, which is kind of like, I would call them almost the Coachella of esports, as well as the Electronic Sports League.
There are a couple of competitors in this space, including your fund. Most of them go very heavily into semiconductors. Most of them have NVIDIA, AMD, Intel, Apple, Microsoft. You guys don't seem to have that. What's different about your approach to those other approaches that have all of these sort of, I would call, ancillary plays?
No, that's exactly right. And I think NVIDIA, AMD, both great businesses and kind of at the top of the game when it comes to GPUs and processing units for gaming. But really what we're trying to do is, when we're creating a thematic ETF, let's isolate this beta that is esports. Let's really provide people that core exposure and maybe not go outside the risk curve and look at things like Microsoft or Amazon that really aren't getting you what we're talking about.
What do you do, you talk about Asia, what do you do with a Tencent, which I would argue is the largest gaming incubator in the world and really at the forefront of a lot of the movement?
No, so Tencent's a holding in the portfolio, has a tremendous portfolio of assets, whether you're talking about Riot Games, which is the company behind League of Legends, or Supercell, which is actually probably the leader in mobile esports, which is something we can talk about as well. But Tencent's definitely a core when you look at it. It's almost a mini gaming ETF in terms of how many positions it has in its underlying portfolio.
But do you think these ongoing national security concerns could dent Tencent and some of these other Chinese companies from gaining mainstream adoption here in the US?
Certainly a possibility, and our portfolio is very much so global in nature, so holdings in Korea, in Taiwan, in Hong Kong. But really, I think if you're going to point out one of these risk factors, I would more look to kind of the regulatory environment that we've seen in China. We saw that in 2017, 2018, where you had actually a ban on new games coming to market. That's kind of one of those ancillary risks that we would point to.
As you try to market or pitch your ETF, how do you convince the Fidelities of the world to put money to work into gaming when it really tends to appeal to a younger audience?
That's a great question, and for us it always comes back to the data. You're talking about a gaming industry that's $150 billion this year, growing about 10% per year. That's larger than the music and film industries combined. 400 million esports viewers this year, growing to 600 million. I think it's only a matter of time before those larger investors start to catch wind of exactly how big this industry really is.
Biggest competitive threat, Dave, to this business?
Well, I think the biggest issue is frankly growing pains, right? I mean, unlike what we see in traditional sports, we don't have sort of franchise teams with multi-year contracts where people can get to know the players. And at the same time, we've got the kind of protests we saw, say, in the NFL, starting to hit some of the esports teams around the Hong Kong protests. How different companies have dealt with that, I think, is going to raise the profile of the space, but also be a little problematic.
What are your thoughts on this space?
I love the space. I'm fascinated by the space. And when I look at some of the biggest companies in the world that I think nobody knows about, they're actually in the gaming space. And I guess my question is, it'll extend my view on the space into how portfolio construction goes on within the ETF, because I think people would like to know that. When I look at an ATVI, this is a company that on valuation is very cheap relative to itself. Call of Duty, the switch to mobile has been fantastically positive in the first month or two. How do you tactically move around in a space that I think some of these big boys are kind of beaten up right now? Do you go after that?
Yeah, no, and Activision's one of our largest holdings. I think when you look at the US publishers, Take-Two, EA, Activision's really the best position for esports. They have Call of Duty League, they have Overwatch League, where they're seeing franchise slots being sold for $30 to $60 million. Really impressive what they're doing. we're, at the end of the day, trying to isolate that esports exposure I mentioned. For us, Activision comes in at a higher weighting than those other companies, and that's really what we're trying to achieve.
The big push into streaming, Disney, Apple, does that help or hurt esports?
I think it's a little tangential, but I think you're going to see more and more of these companies recognize the value of this gaming IP. I wouldn't be surprised if we saw Disney go after one of these companies maybe as an acquisition target, although I'd caution that running a gaming business, very different from running a movie or film studio.
But isn't this traditional content, and isn't this really the way people are consuming content and they're participating in content? So there's a big argument that if Disney or Universal, the parent company of this network, want to get involved in really the right demographic, or at least an evolving demographic, it's interactive TV, it's interactive sports. These are happening.
I mean, this is the future of live media, sports, and entertainment. Like, this is where Gen Z is spending their time and consuming content. It's gaming. It's really not. You listen to Netflix's conference call, they're pointing out their biggest competitor are these game publishers, not Disney. And I think that's really what we need to kind of understand. It's something that's taken place in Asia first, but we're just getting to the point now where it's going to take hold here.
Appreciate you bringing your passion to the desk. Will?